Hello everybody, Cantonese Cat here. I want to share with you my thoughts on Sofi again. It's been a pretty brutal day. Went down more than 15% of the news that there's going to be dilution. And there was a pattern that, pretty much everybody, including myself, was looking at, which is this symmetrical triangle over here, which ended up breaking down today with pretty high volume. There's only 2 days. These are weekly candles. There are only 2 days worth of price action, and the volume's already pretty decent. So there is some level of capitulation over here. A lot of people are, basically paper handing the stock and giving it to somebody else. The thing about these symmetrical triangles, it can get people pretty bearish if it breaks down one way or the other. But these symmetrical triangles actually have fake outs all the time. Like you can fake back up and you actually go down a lot further. And you can go back down and you can actually go up a little, pretty high afterwards. I'm going to show you an example of this just within the Sofi stock itself. If you ignore all these prices over here for 2023, there was actually a symmetrical triangle here that actually had a very similar look. And if you draw the lines from here to there, you're going to see this symmetrical triangle that I was talking about. It looks very similar to the one that we're dealing with. And it broke down. Within week number 1, 2, and 3, on the 4th week, it broke back up. This was all totally a fake out. This whole thing right here was high volume capitulation. Buy volume came in strong after that. That was on the news of when everybody was super scared that there's going to be small banks, defaulting. Small banks are going to fail. The Fed's not going to bail them out. That was based on the fear, and SoFi is a bank, and it basically have a big capitulation candle here. I think a very similar thing could potentially happen here, where price can have a false breakdown and could spend a few weeks to kind of bump up. Of course, there's no guarantee, right? Of course, it could keep on going down. There's no guarantee of anything in life, especially when it comes to investments and trading. There are a lot of levels down here that can serve as good potential support, though. This is actually a lot safer than down here, because down here there really aren't that many supports down here except for really the all-time low here. But here you actually have many different volume shelves here potentially act as support. So I actually don't feel as scared as up here as I was down here. Although a lot of people just entered the stock and they were buying up here, they're buying all up here. They're scared. This looks like nothing when you look at a greater view. This candle here looks like nothing, but it went from 9.13 all the way down to 7.26. So to a lot of people, it's very emotionally devastating because they just lose about 20% of their money or more than that within just a week. If that's you, you shouldn't be entering the stock because it looks just like a bleep. I've seen this before. I've seen this before the other way, but nobody was asking questions then. Everybody's asking questions now, and everybody's kind of freaking out and looking at the levels down below. But there's a lot of support down below. I'm not really so much worried about the symmetrical triangle breakdown. Also, if you use a few examples as to why I'm not really worried about that. So the most recent fake out that we had, and these patterns generally have a lot of fake out too. The most recent example that I have was SPY when it was recovering from this vicious 2022, right? So you can see that there is this trend line right up here that looks like, when it breaks down, some bad things going to happen, but it doesn't matter. These things, once it gets so tight, you're going to break down a little bit, but eventually there's a room for it to go up. This is not impending doom or anything in my opinion. Just like same thing here, you draw a trend line over here. Everybody got faked out here around these levels over here. Everybody's looking at this trend line. This is so obvious. 1, 2, 3, 4, 5. Breaks out. Everybody got super bullish. Everybody went super leverage. Smash all the way back down here. Basically, all of these leverage position became worthless. Bam, all the way back down here. Guess what? Leverage everybody else out. All the bears came out being all bearish. Pushed out the other way. These are very classic fake outs. I'm not that concerned about the breakdown in that symmetrical triangle. A couple of other ones too I want to show you just recently. A couple of inverse head and shoulder pattern that looks like they were gonna fail. For example, this is a pretty obvious head and shoulder, inverse head and shoulder pattern, right? Here's the head or two shoulders right here. Technically, when it breaks back above, a lot of times it can back test and then go higher. And when it back tests down here, everybody was freaking out, saying, "Oh, is it going down to like 12? Is it going down to 11?" I don't know. We're not into clear. I was buying down here. I was buying up here too. Don't get me wrong, but I was buying down here. And sure enough, price eventually ended up, just spending maybe a few weeks underneath of it and went back up. Shopify had a very, very similar look to it back in 2022. When I was looking here, I actually thought that, and I didn't know too much better back then. I actually thought that, hey, what the heck? Why did it break down below this neckline? Is it going to go down again? Of course, I didn't really sell. As a matter of fact, I was kind of buying more here because I'm just a crazy guy. I like to buy falling knives. And sure enough, this is still a valid inverse head and shoulder pattern with a back test, even though it went down a little bit further than it's supposed to. I'm not sure if I'm that worried about the symmetric triangle breakdown. And of course, I am a shareholder. I am bullish on the fundamentals. I'm going to have a little bit of a bias here, but I do have a lot of support down below, so it makes me a lot less worried in terms of that. Matter of fact, I actually don't mind that it got below $8, even though the manner that happened, people worry about technical damage. I'm not too concerned about it, to be honest. I actually want to say that I almost feel like this is, and I don't like to be one of those guys one of those cats who like to complain about manipulation, because all markets are manipulated by somebody. There's going to be big money that's going to move the market. I'm not going to really necessarily blame it on that because it doesn't help anybody. When the price goes up, it's probably also manipulated, right? I mean, nobody ever complains about that when that happens, but everybody complains about it when price goes down. And manipulation. I'm not gonna complain too much about that. Now, with that said, I do want to show you. Let's show you like the 1 hour chart. There is something that caught my eye a little bit. Actually, even look at like a 30-minute chart. There was something that kind of caught my eye here a little bit. It does make me wonder whether or not somebody knew something towards the close yesterday. And you do see a deceleration of this downtrend as today went on. And there was a lot of shares here being traded in, so a lot of people are dumping their shares. But it looks like there is a pretty significant deceleration here. Now, don't get me wrong, the deceleration happened, but if you look at the grand scheme, it can go down further, right? It can go down further. Technically, it is still a falling knife. Someone would drop a knife down here. You don't know how far it's going to go down. But I think there's a potential for it to potentially go down a little bit further. Nobody's really going to tell you where. 660 could be a pretty decent level for it to go down, and technically it'll still be a little bit of like higher low compared to here. I don't know. Just like it dipped down here, technically this is also a little bit of higher low over here. And I do think that these patterns actually look very much alike. And you also have this candle right here that really reminded me of this candle right here, as I showed you earlier. I don't think anybody really knows what's going to happen, and Sofi is particularly difficult to predict. So one reason why it's very, very difficult to predict is if you look at other stocks, like there's some other stocks that are just very, very obvious. Once it happens, this is not even really much of a question to me. For example, CleanSpark. From here on out, going up, this is a bull trend. Higher lows, higher highs, higher lows, high, equal low. Some would argue that maybe a little bit of a higher low compared to here. Higher high, higher low, higher high. This is a bull trend. You don't need any indicators to tell you that. Another one that really has started building the whole bull trend is Hood. Higher low, higher high, bull trend, breakout. It's not a question. Sofi, what the heck is it doing? Is it a okay? Is a higher high? Is a higher low? Is a lower high? Is a lower low? Consolidation, symmetric triangle. Now it's like an equal low. Like, is it going to go back down here? Is this going to be a higher low to that? Is it going to be similar to what's happening over here? Who knows? It's not that easy to try to find a trend by just looking at the price action over here. What you can look at is that the price action over here is higher than what it is over here. Overall, there tends to be a trend that's going up. And there are a couple ways to look at that. Sorry about that. I've been getting called, pretty much getting interrupted every hour. That's why I haven't really been doing any video or doing much of the post as much as I used to. But getting back to what I was talking about, the whole idea is that it's hard to tell the trend for Sofi. How do you tell? It is making some highs over here compared to over here. So overall, you are having a little bit of a channel going up. One way to tell the monthly trend is to look at the Bollinger Band, see what it's doing, which comes to the 20-month moving average and is pointing up. Even though the price is getting close to touching it, it is still pointing up. So the monthly trend has changed because of all of these price action over here from month number 1, 2, 3, 4, 5, 6, 7, 8, 9 has been staying on the upper part of the Bollinger Band. And the longer it stays on the upper part of the Bollinger Band, the higher the chances you are going to be able to drag the Bollinger Band up and to start developing a bull trend. And that's exactly what Sofi ended up doing. And right now we're on month number 9. Right now the price action looks like it might actually want to touch the 20-month moving average and maybe even dip a little bit lower. All these are possible. It could even wick down further. But right now the 20-month moving average is at 7.19. This over here is telling you that the average over the last 20 months is telling you that there's a bull trend that's developing. Of course, there's always subject to change if price ends up going back down here and below the on the lower part of the Bollinger Band for a longer period of time. Then you're going to run into a little bit more trouble, and it's going to be a little bit less likely for you to end up developing a bull trend. You might have to fight a little bit harder to get there. The other thing I wanted to show you, while sparing you to try to figure out how to draw this, I went and paused the record and I drew this for you. This is a pitchfork, and we're basically trying to identify the channels where there's a significant price rejection and price support. And this pitchfork right here actually looks pretty decent. It looks like it's basically following the same similar pattern. It touched the top right here, and then it unfortunately went down below it. Tried to do a back test, failed, and went down further, and eventually went back up here, got hit to this level right here, got rejected, went down further to hit the bottom part right here, went all the way back up to the top. Now it's basically following a very, very similar pattern from here down here, from here down here. It went up to this channel right up here to the top of the right here, broke through again, have a little bit of like a bear flag kind of thing, and then drop down right here. Could it drop lower? Sure, it's potential. If you're looking at this pitchfork, there's a potential for it to go all the way down to the 6s. And I'm just being completely objective. I mean, this is a guy who's been calling 14 for a very long time. There's a potential for it to go down to the 6s, which is going to be confluent with this volume shelf support right down here. And after it touches that, it could go directly up to 14. It's entirely possible. I don't know how far it's going to go. I don't know where it's going to go up to 14, whether or not there's enough changes in the sentiment or fundamentals. I think by then you're going to end up potentially already have a couple more earning reports that come, and it could potentially propel it up if the fundamentals keep on improving, right? I don't know, but just looking at this, there's a risk for this to go down here to this level right here, which is confluent with the volume shelf. There's also potential that it just make a little wick down and just bounce up, or it can filter down here eventually and go up. I don't know. I just want to show you what happened here. It looks like it may potentially be making a fractal over here too. That's one possibility, but it doesn't always have to necessarily work out. If that's the case, I mean, I'm comfortable buying here now. I don't know whether or not it's going to end up going down here. It could end up finding support at this volume shelf, and it could bounce. There's no guarantee that it has to test the bottom of the channel. Just like here, there's no guarantee that it has to touch anything, right? You never know. This is just an idea. The other thing I also wanted to show you, I thought particularly interesting about Sofi, is if you draw the Fibonacci levels just roughly, I'm not going to do it in an exact manner, but if I just draw the Fibonacci level roughly, it tends to follow it very well. If you go from the all-time high to all-time low, it spends a significant amount of time trying to break about the 0.136 level, failed to do so, went back down, eventually built up enough energy to push through, and then it tried to retest this level, eventually had a false breakdown here, and then tried to attack this level up here again, got rejected down here again, and then started to lose a little bit of momentum around here, went back down. I don't know whether or not this is another one of those false breakdown. I really doubt it was all going all the way back down here, but it could be one of those where just like very similar to here, it could spend a few time, maybe a couple weeks, maybe longer, around here, try and find some support of the volume shelf over here, and eventually push itself up higher. That's certainly a possibility, or it could potentially even go down to here like it did over here, had a little bit of a false breakdown, try and find some support underneath over here, or even like just over here and then bounce up. I don't know what's going to happen, but I think it's very, very interesting that Sofi has been respecting these Fibonacci levels very well. Even as on his way down, these Fibonacci levels tend to mean something. Just like here, support, resistant, maybe support, resistance, resistance, resistance. So these fit levels actually mean something. The fit levels are located at 7.5, which is why I think any prices below 8 generally is a pretty decent deal. But if you want to get even a tighter benefit, if you're really one of those people who really hate even having any kind of unrealized loss, then you can buy below 7.5. 10 and 13.5, which I'm just going to round up to 14, because 14 there's there's a volume shelf right up here, which is going to be a pretty strong resistance. There's also another volume shelf up here. It's going to be pretty strong resistance. We'll get there when we get there. Right now I think everybody's kind of more worried about what's going to happen down here, and because of how much support and price history we have here, I have a feeling that it's going to find support eventually around this range, and it should bounce up. But the original optimistic scenario where it could just keep going up like that and break through all these volume shelf, it's not happening, at least not happening immediately. This is a little bit of a breakdown, and it does probably take maybe a few weeks for it to kind of correct itself. Just being realistic here. Ichimoku Cloud. There was a thought, it was an idea that I had that because of how strong resistance over here, because it broke through resistance, it was trying to test it back at support or at the cloud right here. There was a thought that I thought it was going to bounce from the cloud going up. Of course, none of these are guarantees. There's always going to be some false breakdowns, some false breakouts here and there. None of these are guaranteed. This is just an idea. Just like any moving averages, sometimes you can have a pretty decent moving average pointing up and you can still break down below that moving average. And these things happen. I'm not going to be bothered by it so much. But it did break down this Ichimoku Cloud on pretty decent volume, on just 2 days worth of volume for the week. So it's unfortunate, but I do want to show you something. Instead of looking at the Ichimoku Cloud, I've been playing around with the Super Ichi Cloud, which takes into consideration of the Super Trend as well. The Super Trend has something to do with taking into account of the volatility to calculate the trend along together with it. And what I'm seeing here is there's actually a bullish cross right out here. That is still sustained. The Tenkan Kijun cross or the weekly on the Super Ichi Cloud is still sustained. There hasn't been any bearish crossover. If you take into account a super trend, technically this is still bullish. The price that got rejected from the cloud did go down, but technically this is still relatively bullish. If you just look at the super trend, technically this is still bullish, but so was here. But technically the super trend was still bullish, so this is just something to think about. Other thing was to show you the monthly. I want to show you one last thing and I'm going to let you go. The Ichimoku cloud for the monthly, I was pointing out, I made a post about how I had a bullish cross right here. The Tenkan is crossing above the Kijin. Technically, this is supposed to be a bullish thing. How come we had a big giant candle here? Well, these lines can also serve as support and resistance. It kind of served a little bit as a resistance last month, and it tried to break above it and it got rejected. So as you got rejected from resistance, sometimes you can have a pretty big breakdown and end up doing that. This is not the end of the world because I've seen this before in other stocks. For example, Tesla. Back in 2016, you have a bullish cross that happened right around here, but the price broke down anyway. It took about a few months. See, you got rejected right here, got rejected right here, but it took a few months for it to break back above. The other example I have for you was Mara. Back here in 2020, you had a bullish cross, but price got rejected, went underneath, went pretty far down underneath actually. Everybody was freaking out down there. And try another month trying to break back above, was not able to, but because of this bullish cross, eventually the trend was up and it went up. This is just a way to tell you the longer term trend. There is a shift in trend. Even though it got rejected initially, it could take a couple of months for it to go up, but the trend seem to be turning bullish because this is a summary of all these price actions over here, and there is a trend change. That's what this is telling you. I do want to thank you for listening. One last message. None of this is definite. Sofi is one of the hardest stocks to chart, and I've been burned before. I've been wrong before. I don't mind being wrong. I just hope you don't lose any money by doing any kind of crazy day trading or leverage or do call options with short-term dated. I just don't want you to do that based on what I'm showing you, because what I'm showing you is a long-term trend. I have the investor's mindset. Even though I'm showing charts, it could be counterintuitive to you all, but I'm looking at the longer-term trend. I'm trying to figure out where I should put my money based on both my understanding of the fundamentals, which I don't verbalize very much because there are better people that verbalize a lot better than I do, but I do read those kinds of things, versus having a technical actually support behind it. I still think that Sofi is in a bull trend in the long term based on this, and also based on the Bollinger Band with the 20-month moving average still pointing up, and based on the fact that the price has spent so much time underneath. Down here we have more supports than we have resistance at this point. I think it's going to be fine, but it's hard for me to say that when everybody's hurt and everybody's not happy about what happened today, which I completely understand. I'm going to let you go. Thanks for listening. Bye.